Welcome to another S&P 500 analysis. Today is October 17, 2021. Last week, the S&P 500 bounced back from a 5.8% pullback. But did you notice how this bounce ended? In this video, I will show you what the market is telling us about the way the S&P 500 ended for the week. Also, we will review the sentiment and the market internals, along with the 10-year yield, the US dollar, gold, silver, and the oil market, and see what they are telling us. Stay tuned. Let's start with the weekly chart of the S&P 500. The S&P 500 ended the week with a gain of 80 points or so, or 1.82%. And the range for the week was 145.9 points. The S&P 500 closed the week above the 10-week moving average and above the 40-week moving average. Also, the S&P 500 have broken this 5-week one-time framing down price pattern. So on a weekly basis, the S&P 500 is in an uptrend. Now, looking at this sentiment chart here, you see the VIX came down to 16.3 on Friday, so it's below this 20 level. And also the put-call ratio is also came back down below the 0.75 and sitting at 0.59. At the end of the session on Friday. So the market participants are getting a little bit more complacent once again and start putting risk back on. And looking at the New York Stock Exchange internals, and we see that the up-down volume ratio has been up 4 days out of 5 last week. And on Friday, it closed at 1.7 times more up volume than down volume. But notice the advanced decline. Actually, the declining issue led the advancing issue by a margin of 72, which is not a good sign when we see the S&P 500 is up 33 points or close to 0.8%. But for the New York Stock Exchange new high, new low, the new 52-week high actually outnumbered the new 52-week low by a margin of 174. We did see 205 new 52-week high, but the noticeable thing is the number of new 52-week low. It is coming down in a recent day, so that is a little bit of a positive sign. Here on the New York Stock Exchange cumulative AD line, we are noticing a slight negative divergence between the AD line and the S&P 500, and that spells caution. Now, let's take a look at the NASDAQ market. The NASDAQ 100 closed almost 95 points on Friday. But we noticed that the declining issue outnumbered the advancing issue, similarly to the New York Stock Exchange. But in the NASDAQ market, it's actually a little bit more negative because there was 630 more declining issue than advancing issue. And the up-down volume ratio is only 1.14. Now, the positive thing about the NASDAQ market is that we are seeing a little bit of expansion on the new 52-week high. As we could see on Friday, it was actually 152 new 52-week high versus 58 new 52-week low. So the difference is 94 more new 52-week high than 52-week low. And the other thing is that we are noticing that the number of 52-week low is coming down. So again, that is a positive similarly to the New York Stock Exchange. But once again, we also noticed a negative divergence between the cumulative AD line and the NASDAQ 100. So that is a negative. So what are all these internal telling us? Well, the one thing is the market is firming up a little bit based on the new high, new low. But we are seeing a little bit of a negative divergence from the cumulative AD line. That means the market is telling us that it may be due for a little bit of a pause or a little bit of a pullback. But does it mean that the reversal from the recent pullback is actually a potential bull trap? Well, right now, that's a possibility. But we're going to take a look at the price action of the S&P 500 and along with the other market. At the end, I give you my summary of what I see the market might be planning to do. Looking at the daily S&P 500 chart here, as you can see that the last week it put in this hammer spinning top type of candle on Wednesday, and this seems like it's a little bit of a intermediate low here. And in addition to that, it is putting up a higher low and also a higher high. That in combined with breaking this trend line here, that put the S&P 500 in the realm of that it might be coming up for a retest of the all-time high. Now, as a reminder, we still have that Globex E-mini S&P 500 future all-time high that need to be tagged. So when the ES come up and tag that all-time high that was printed on, doing a Globex, I believe it was September the 3rd, okay, then the S&P 500 most likely will also put in a new all-time high. So bear that in mind. Now, again, when we go back and remember, we look at the advanced decline line, the AD line, it shows there has been a slight negative divergence, on Friday. So that also a sign that we could expect the S&P 500 might pull back a little bit in the near term before it pushes higher. So don't get too aggressive on the long side yet. Wait for that little pullback and then look for potential long setup, and maybe that will give us a better clue to push the S&P 500 to retest the recent high. And looking at the NASDAQ 100 here, we notice that it did not come down to this trend line, because that was one of the things that was we were watching for to see would it be able to come down and test this trend line, see would it get a support and then bounce back up. As you can see on Wednesday, it also printed a little bit of a spinning top type of hammer. Then on Thursday and Friday, it gapped up. And also similarly to the S&P 500, it put in a higher low and a higher high, and also booked this downward trend line. So once again, we basically are looking for the NASDAQ 100 to possibly move up to this level here near this 15,400 and test this high. But again, remember when we look at the internal, the AD line on the NASDAQ market is also showing us a negative divergence. So we are also expecting the NASDAQ 100 to possibly pull back a little bit in the coming days. Then it might find some support somewhere around this area and then get a little bit of a push back up, take out this high, then all of a sudden the recent all-time high will be back in play. Now, some of the tech stock is starting to report earnings next week, and two notable one is Netflix and Tesla. So watch those two stock to see those two companies to see how the earning report comes in and how the market react, and that will kind of give us a little clue of what to expect for the other FANG stock to report in the coming week. And look at the Russell 2000. Remember, we've been watching to see would it be able to reclaim this 2297 level. As you can see on Friday, it spiked up and it immediately got sold back down. And you see that it closed back down inside of this below this trend line after it has broken it. So that might not stand well for the Russell 2000 in near term. So I would expect to see a little bit more pullback and possibly come back down to this 2195. So just keep an eye on that Russell 2000 there, unless it could, move above this 2297 with conviction. Another word, pretty solid green candle. Then we will have to be remain cautious on the Russell 2000. See would it be able to even get up to this, get up to this zone here, this upper edge of this zone, because it need to recapture this 2297 and break above this 2317 before we could look at this high to be back in play, the 2360. Now, looking at the Dow Jones Transportation, remember we've been watching to see would it be able to recapture this 15,000. Not only did we capture that 15,000, it did it in a gap up type of manner. I mean, this thing is hopping on Friday, right? So right now, we're essentially watching this 15,346 to see would it be able to come up and take out this level. If it does, then this high is in play, the all-time high, all right? Now, I wouldn't be surprised to see it come down and fill this gap, essentially come back down to this 15,000 and kind of retest it before it pushes up toward the 15,346. And here you see the Dow Jones Industrial also broke out of this consolidation area, this balance area here. And right now it's above that 35,150. It closed on Friday at 35,294. So this could be in play, the all-time high. So keep an eye on that. And looking at the New York Stock Exchange Composite, look, it is getting close to coming back up to this all-time high here, which is 16,944.48. Right, the high last Friday was 16,914.67. So it's about 30 points away from that all-time high, right? So, and this is a broad market index. So this have much more credence on how, how strong the market is comparing to the NASDAQ 100 or the, S&P 500 or the Dow Jones 30, right? This is more than 3,000 stocks that are traded in the New York Stock Exchange. Okay, so this thing here, watch for this thing. If it's gonna make a new high, then look for those other index to follow suit. And now let's look at the SPY, the ETF for the S&P 500. You can see that the price came to this gap here. I mean, this price zone here. We're looking at this high volume price zone. Okay, so you see that it gap up above that. So if it continue to move up, we're basically targeting this thing possibly come up to this 449.50. But because of the negative diversion on the advanced decline line, we will not be surprised to see it come back down into this zone and chop around a little bit before it pushes up. Okay, so so that's what we're going to be paying attention to for a little bit of a pullback, right, in the coming days before it pushes up to this 449.50. Now, if it continue to push up before we see a pullback, then we expect this most likely to get rejected and come back down to this, possibly down to this point of control, this composite point of control, somewhere around 434. Okay, so what we would like to see, if you are a bull, then you would like to see it chop around here in this price zone, somewhere around this 441 and 443 area before it pushes up. And for the QQQ, the ETF for the NASDAQ 100, as you can see, it moved above this composite point of control here and got up to this 368.78, this price zone here. All right, we basically was looking for one of the scenarios break above this trend line, come back, do a little bit of a back test of the point of control, and then pushes up for this value area high, the composite value area high near 374.23. So right now it's coming up to this 368.78. And once again, because of the negative diversion on the AD line, we possibly could see it come back down and retest this point of control, or it might even dip below here, essentially to fill this gap or back test this trend line before it get a push back up here to this value area high. So that's basically the one be watching for the price action to see will it, wait for the pullback to this point of control. But if it pushes up all the way up to the 374, then we wait for this thing to come back and back test that. Let's take a look at the 10-year yield. The 10-year yield came down to a low of 1.507 last week before it bounces back up to 1.576 on Friday. So I'm still watching for a retest of this level at 1.7. And for the US dollar, we saw it dip below this 94 level here. So right now, I'm basically watching to see would it come back up to this 94 and move up to this 95.7. But if it doesn't come back up to this 94 and stay above it, then I expect it to come down to this trend line here somewhere around this 93 area. So we kind of keep an eye on it to see will it be able to hold above this 93.50, between 93.50 and 93.70 level. Okay, so if it could hold above these, these price level, then we could see it bounce back up above this 94 and inch its way back up for this 95.70. Now notice the crude oil actually went above this $80 level, and it even exceeded the $82 level last week. Closed on Friday at 82.28. And if we zoom out to the weekly price, we could see there is a possibility for oil to get up to somewhere close to $85 a barrel in the near term. So let's go and take a look at the weekly price here. So here on the weekly chart for the crude oil, you see there are some price level here, support resistance pivot near this 84.94. So it's close to that $85 level. So I'm a bit surprised to see oil to come up and try to test that level in the coming days. Now, looking at the silver market, one of the scenarios that we're watching is for silver to bounce back up and to this trend line and get rejected and pushes back down. So as you can see that last week on Thursday actually came up to that trend line, and also Friday got a little bit of a rejection. So we're going to keep an eye to see is this rejection actually get silver back below this 22.72 area, and if it does, then we're essentially looking for silver to come down and test this low here, which would be around 21.41, and then continue on down to possibly get down to this $20 level, or even come down to this 1960 area. But if it could push us up, break above this trend line, then we're essentially looking for silver to make its way up toward this 24.71 area. Last week, gold came back up and we tested this 1804 level. As you can see, it got rejected once again on Friday and pushes back below it. Now, there is still the possibility for it to continue to move up and retest this 1804 once again, and possibly even break through it and come up to this potential neckline of this inverted head and shoulder. But I was saying that this right shoulder is kind of pulled back too steep, that this inverted head and shoulder pattern will likely not be formed. And still right now, I'm still looking for gold to retrace back down and test these level here, the price level inside this zone between 1716 and 1677. So as you can see from the AD line, the cumulative AD line from the New York Stock Exchange and also the NASDAQ 100 is giving out cautionary sign that we should expect a little bit of a pullback. The recent run might be a little bit extended. But in addition, we also noticed that the New York Stock Exchange Composite Index is inching its way toward the all-time high. So that is a positive sign that the market is building up strength to push higher. So don't be fooled by any type of a pullback that we see in the coming day to think that this is a bull trap. Okay? What this market is telling us, it is going higher. So although that right now you're saying, well, last week we're basically looking for a pullback maybe to a little bit more into the 6 or 7 or even the 8% level. Why is it all of a sudden that the market, we are talking about the market, coming back to retest the all-time high again? Well, that's the thing. The market have been telling us to expect the S&P 500, the possibility for the S&P 500 to make another new all-time high based on the performance from the ES, right? The E mini S&P 500 on the Globex all-time high that was printed on September the 3rd. So that is the reason why we always is hesitant about this pullback to be anything more than a pullback, not even a correction, and especially And we mentioned that it is crazy to even think that this market is going to crash. In other words, get into the, bear market territory of, pulling back, dipping down more than 20%. So let me leave you with this on the ES. I tweeted this out on October the 13th at 10:53 p.m. at Pacific time. So that is essentially 1 o'clock Eastern time. And can you see why I close out my short on the SPY, the ETF for the S&P 500 after the ES, the E-mini S&P 500 hit the 43.17 low. And that tweet was basically in response to this tweet that I posted on October the 12th, the day before or the night before at 8:34 p.m. Pacific time. Are you still looking at all-time high? And I said, yeah, but I'm still also looking for a little bit more pullback, but not a crash type. And I said, disclosure, I am short the SPY via some puts. So essentially the following day, when I saw that certain price pattern that hitting that 43.17, if you look closely, that is a double bottom, type of pattern testing that support level of 43.17. And that's when I took my position on shorting the SPY and closed it. And here's the chart after I closed my position, after basically Wednesday when I put out this double bottom, close on my position right near here, off the 43.17 low. Okay, and you can see the ES just whipped it higher and all the way up to the 44.65 and a quarter on Friday. So if you're not following me on Twitter, you might want to consider just take a look at my Twitter channel and some of the stuff that I post throughout the week. And you might find it interesting, or at least a little bit entertaining and hopefully informative as well. Okay, so be sure to smash that thumbs up for me to help me promote and share this video. Thank you for watching and stay safe.